What if I told you that you could turn your pocket change into a small fortune without winning the lottery? Yes, I am the one who saved $100,000 as a single mom on a teacher's salary. And today we're diving into one of my favorite topics that has helped me stack some serious coins over the years: high yield savings accounts and compound interest. Today, I'm going to show you how you can start growing your own savings with just $100 in a high yield savings account using compound interest. Plus, I'll explain why daily and monthly interest accruals could be your new best friend. And make sure you watch until the end for a special bonus tip. Let's get into it. What exactly is a high yield savings account? Well, unlike your typical bank savings account, high yield savings accounts offer much higher interest rates. So, if you have a typical bank account, you'll notice at the end of each year, you may accrue a small dividend on that account. A high yield savings account is specifically generated in order for you to use it as an investment. This means that your money grows faster and only by sitting there. The best part, you can start with as little as $100 or less. Step one is going to be choosing the right account. You want to look for accounts with the highest interest rates as possible. These are going to vary by bank and company between 1%, and some go all the way up to 5%. You also want to consider factors like any fees, minimum balance requirements, and also the ease of access to your money. For myself, I have a high yield savings account through the bank that my checking account is with. My interest rate on that account, 3.99%, which is incredibly good for a high yield savings account. And that interest accrues monthly versus annually. And so it compounds consistently every single month. Another bonus of that account is that I have access to that money at any point in time. There is not a minimum amount of time where that money has to be held, like you would see with a CD or something of that nature. So I can access that money at any time. Step two is going to be simply understanding the magic behind daily and monthly interest accruals. As we already talked about, traditional savings usually calculate your interest once a year at the end of the year, and you get paid a small dividend. With a high yield account, your interest is going to be calculated either daily, depending on the type of account, or monthly. Monthly is going to be one of the most common rates of accrual, but when you are accruing this interest at a higher frequency, this is called compound interest. And what this means is your original investment builds interest on itself, and then you continue to build interest on the interest that has been combined or compounded with your initial investment. Here's how it works. Let's say you start with $100 and you have a interest rate of 1% annually. That's not much, but if that 1% is compounded daily, every day, then you're adding to that $100 every day in the form of interest. And then the next day, you're earning more interest on the 100 plus the interest from the previous day. So over time, this adds up to significantly more than if it was only calculated once a year. Let's break it down into another example. 5% interest accrued annually on a $100 investment would be $105 at the end of the year. However, in a high yield account, best case scenario, you are accruing interest daily. Worst case scenario, you are accruing monthly, which is still amazing. And again, that's the most common way. But if you were to be accruing on that initial $100, your first month, your earned interest at 5% would be, you would have $105. The next month, you would then earn interest not on $100, on $105. You earn more than $5 in interest that next month. And then the following month, you would earn your 5% interest on the balance, including the interest that was accrued the previous 3 months. And I'm going to insert the math here so you can see the comparison between annual interest and monthly interest. Step three, after you have found the right account for you, determine how much you're going to start with, you're going to make your first deposit. And that's just going to be as simple as transferring $100 from your checking account into this new high yield savings account. And just like that, you are immediately on your way to building more wealth and building that savings. If saving a huge ton of money seems unattainable to you, I'm here to let you know that using these tools, it is. And also remember, once you've started with $100, you don't just have to rely on your interest earning. You can continue to add your own $10 a month, $20 a month, $100 a month, $200 a month to that account. And compound interest will continue to work for you because you will continue to earn higher percentages, higher rates on the money that you're adding to, as well as the interest from the previous accrual. And really, that part is just about setting a habit and sticking to it. And I promise you, it works. And here's the other thing about compound interest that's really important. And that is the sooner you start, the bigger that money tree grows thanks to compound interest. The difference in starting to invest that initial $100 or $1,000 between the age of 20 or waiting to start at 30 or 40 is going to be tens of thousands of dollars over time. People who start to invest in their 20s, by the time they're 60, they've compounded significantly more money than people who only start thinking about investing in their 40s or 50s. And contrary to popular belief, this is not about having a ton of money to start with. It's about starting early and sticking to the plan. Even the smallest amounts can still turn into a mountain over time. That's the beauty of compound interest is it levels the playing field a little bit. Whether you're saving for retirement, a dream vacation, a new home, or just a rainy day, remember the best time to plant a money tree was 20 years ago. The second best time is today. Don't get hung up on the fact that you may not have a ton to start with. The key is just to start. If you're ready to start saving smart, seeing your money grow, a high yield savings account might just be exactly what you need. And if you found these tips helpful, hit the subscribe button for more finance tips and share this video with someone who needs to hear it, someone who needs to get started on their savings journey. And also let me know in the comments if I explained this well to you. I want to know what your savings goals are, where you are currently in your financial journey, and if there's any other content that you want to see me create. Until next time.